What's up, everybody? Welcome back to Trading Wars for a double dip. We had the live streaming earlier with SPY. Went through some few live setups there. And now I really want to take some time to focus on Lotto Friday and just give you guys some tips, get you all ready for that, and just talk about like the general approach to how you deal with Lotto plays. And we're going to let everybody come in because I know I just kind of did this last minute. So I'll give people some time to come in and get settled down. Hope you all brought some coffee or some alcohol, whatever you need. Let's really focus on this today. So generally, guys, I'm going to just start writing down some notes here so we can start discussing this. But what's going on? What's going on, guys? What's going on, Melly? Welcome back. Lotto Friday, right? So let's talk about this. I really want to focus some time on this. Lotto Friday options. Let's talk about this. So what does a lotto mean in the first place? What does it mean? So a lotto, guys, trade is literally like playing the lottery, which what it means is that the probabilities are not always the highest, right? We know that generally from playing the lottery, but if you do hit on a play, if you do well on a play and you get the right direction, you can make a lot of money. All right. So let's write some of these things down. So Lotto Friday, so options it's high risk, right? It's high risk, high reward. Okay. So right off the bat, what I recommend is proper position sizing. Okay. So 1 to 2%. So what does that mean? If you know that you're going for a home run trade, then you have to not risk a large percentage of your account because you know it could either go two-way. It could backfire or it can turn out really well. So when we're doing lotto plays, guys, we really want to have proper position sizing. We want to keep it between 1 to 2% of our capital. So if you have a $10,000 account, you don't want to be risking more than $200 per these lotto plays. All right. And what I like to do is another one that I'm going to write down here is diversification. So what I mean by that is you'll see, right? Like I already posted some picks for tomorrow. So let me pull those over here. I have these picks for tomorrow, and I would ideally like to be in as much names as possible. So you guys know that I trade SPY every single day, and SPY has priority because SPY is very liquid. The spreads are very, very good. So I'm going to be trading SPY tomorrow in the Discord right here. Let me show you guys. I'm going to be doing lotto plays on SPY, giving live commentary in this room right here, the SPY setup alerts. But in general, guys, you want to have it spread out, right? Because you don't know which play on the week is going to be a big boy play. You know what I mean? Which one is going to be the winner? You don't know. You don't know. So proper position sizing and diversification will always give you an edge. The biggest issue that I've heard in trading lottos in general is that people will focus on one specific name. So for example, someone might look at this list and be like, I really like DraftKings. And they put all their money into a DraftKings play and it doesn't work out. And if it doesn't work out, then they're stuck. Meanwhile, one of these other plays might be the one, right? So hit me with the one if you guys are following me so far, right? So options, lottos are high risk, high reward. We need to have proper position sizing and we need to diversify. We need to spread it out amongst many names. SPY is always a lotto candidate, always, because the spreads are always good. Okay, the liquidity is always good. If you want to pick just one, then I would actually just trade SPY. Okay, that's why I have a room specifically for SPY. But if you want to spread it out, then you want to diversify. All right, so we have high risk, high reward, proper position, diversification, and now strategies. Right. So what are the strategies that we need to trade, guys? Let me just retweet this again because I did it last minute. I apologize. I'm live now. Come for Lotto, come for a Lotto step-by-step guide. Let's see if that brings in some candidates, guys. Options. Boom. So strategies. So the main strategies we have: opening range breakout, triggers, fractals, fibs. Right? That's what we have to work with. So generally, right off the bat, the easiest one you can execute is going to be a trigger, right? Because a trigger is just going to be like I already posted the plans for tomorrow for the trade plans. But as an example, a trigger is just going to be a set order. Enter here, stop here, target here, use the 325 calls as an example, right? So the triggers is really simple because you can just set it and forget it and walk away, right? Everything else here, orb, trigger, orb, fractals, and fibs requires you to actually be at the screen, right? So what I'm going to do here is I'm going to go back to last Friday, and let's look at last Friday on SPY, okay? Let's look at that. But before we get there, guys, hit me with the 1 if you're feeling good. Hit me with the Trading Wars Army if you're ready to rock and roll, all right? And let's take our time. Let me try to really educate you guys today. I just want you guys to be prepared for tomorrow. I want everybody to be safe and to be educated. All right. So here we go. So this was last Friday. Okay. So as you can see, guys, what we did last Friday is we took the opening range breakout of the first 5-minute bar. Right. Very simple. The puts went for, I think, 200%. Just taking the opening range breakout, something simple, guys. We're trading bar by bar. So if this doesn't work, right? Like if this fails, if it breaks and then turns around, it's okay. We lose 1 bar. Okay. But if it works, look at all this gain. This is how you double, triple, 5 times your money, is through these type of plays. And the orb is always a good strategy right off the bat. Always. It's not going to work all the time, but when it works, it's very simple to execute. The next thing we have is fractals. You can see here we have the Trading Wars Nirvana. We have the Holy Grail, right? We have all the patterns setting up here. So these are giving you signals to try again. Right here, we break to the downside. That's a short. Right here, we break to the downside. That's another short. So the fractals are really powerful as well because they give you another bar by bar approach. You see what I'm saying? You risk a bar, but you can make 3, 4, 5, 10, 20, 30 bars. That's how you keep your P&L positive. So another thing that I want to talk about is timing. Okay. With lottos, what happens is if you're not in the money by the end of the day, your lotto will expire worthless. So for example, here's SPY. So let's say tomorrow SPY finishes right here at 466.31. If we bought the 467 calls, they would be out of the money and they would be worthless by the end of the day. So generally, guys, remember what I always tell you, right? The morning has a lot of action. Like the morning usually has those pushes, 1 or 2 legs. Then we kind of go sideways and then we can kind of just do nothing. So really what you want to be doing is you want to be getting in your position early in the day, covering the majority of your position near the afternoon, and then leaving a runner or 2 on into the close. Does that make sense? Hit me with the 1 if that makes sense. Okay, so that's timing. Because remember, every minute, every 10 minutes, every 15 minutes that you're on the clock on a lotto day will be decaying your premium. So if you're not getting a movement on your premium, it's going to decay because there is a time value of money associated with the option. So this is the double-edged sword of lottos. It's either going to make you a ton or it's not. Okay. But it is a powerful way of trading, especially if you know what you're doing, you have a good strategy, and you're managing your risk. Those are all very important things. All right, so for the latecomers, I'm going to start off from the beginning. Okay, let me just recap everything. So the reason that these option plays that expire on the same day. They're called lottos. They're called lottos, guys, because it's almost very equivalent to playing the lottery, right? Because it's not, the probability is not really high, but it gives you a chance to get a high payout. So we have a high risk, high reward situation. And that's what makes it most attractive to people. But in order to do this safely, okay, you need to have proper position sizing, meaning 1 to 2% max of your capital. If you have a 10K account, no more than $200 per option play. The moment you start getting greedy, averaging down, adding $1,000, $5,000 when you have a 10K account is the moment you will blow up your account. And I have done that before many, many years ago. So I know exactly what I'm talking about because I've been there. Let me ask you guys, honestly speaking, how many times have you lost more than you should have because of greed? So for example, you start averaging down on a lotto, or you start averaging in because you feel like, hey, it's going to bounce this time. It's going to bounce this time. And then you know you're supposed to be putting $200 max, but all of a sudden you're at $4, $5, $6, $7, $800,000. And then all of a sudden it expires at the day worthless and you lost that. I've done that before. So my hand is up. So hit me with a 1 if you've been in that situation. Yep, right. I see a lot of people. We've all been there, guys. We've all been there. So that's why I've introduced this diversification strategy. Okay. So like what I mean is, here are the picks for tomorrow. Spread it out. All right. Pfizer's not going your way. Try Cisco. Oh, that's not going your way. Try DraftKings. Not going your way. Try SPY. You spread it out. You spread it out. And really and truly, if one of them hit big time, they'll pay for the rest. Right? And we've caught big plays many, many times, but it just comes down to being consistent and diversifying your money across the board. Because if you get stuck in one bad play and then you decide to average in or average down, that could be the end of your account. All right. And then back to the strategies. So I have free videos for all of these strategies, right? Opening range breakout, triggers, fractals, fibs. I also have my book. If you guys are interested, the book goes through it in detail, has 70 pages, etc. Has 100 charts that you can look at, everything explained here. And it also comes with 1 month free in the room. So you can check us out tomorrow if you're interested. But all those strategies, guys, the ones that I like to focus a lot on, one that I want to talk a little bit more about is the Fibonacci. Okay. And you might be asking, why the Fibonacci? You might be saying, why? Why would you do that? Well, I'm going to show you something. Okay. Let's go back to last week. So last Lotto Friday. So we had the opening range breakout. We took that one. Boom. That was a huge winner, right? But let's say you want to short now, right? A lot of people, what they do, guys, is they short at lows. So for example, like when this bar closes at the low, they buy short because they felt like they missed it. But what the Fibonacci does is it allows you to get in on a pullback. So if you want to short, okay, wait for the market to come back up into a good short position. Let it come back up. And the reason why is because when it's coming back up, what do you guys think is happening to option premiums? So get the pen and the pad out right now if you don't have it out. But get the pen and the pad out so we can write this down, okay? What's happening to option premiums on the Fibonacci pullback? Fibonacci pullback, looking to enter for continuation of the main leg. So what's happening to option premiums there? Right? They're getting crushed. So now when you stack a Fibonacci, guys, you're getting it on the way back instead of chasing it. So now you're going to get those puts for cheaper, right? So let me show you an example. So here was last Friday, right? We come here. Now check this out. A lot of people are going to buy puts at the lows of these candles. But guys, when we come back up here, we form the Nirvana pattern. So now instead of getting in down here, down here, down here, down here, you can use the patterns to help you enter. So you could see right here, rejection, okay? Once we break the low of this outside bar, you can enter here. So now you're getting a better entry than entering down here or down here or down here or down here. You see what I'm saying, guys? Because the premium is going to ease up a little bit. I think a good example would be today. Let's look at it today. Right, so here's a great example. Okay, so let me show you guys some stuff. Okay, so here's a great example. So let's hit the replay, and let's do this step by step. Let me draw the fibs for you. I always draw the fibs, guys. I always draw the fibs in the room for everyone. I try my best when I see them applicable. But just hit me with the 4 for the 4 horsemen right now if you're ready to rock and roll. Hit me with a 4, and then we're gonna go in detail. Okay, hit me with the 4 for the 4 horsemen. We need to separate the Fibonacci into 2 categories, into 3 categories mainly. 3. Boom, Sharky. Welcome to the Trading Wars Army, brother. Appreciate you. Guys, in the Trading Wars Army members, can we get a Trading Wars Army for our brother Sharky? Can we welcome him? Can we get a Trading Wars Army for our brother Sharky? Welcome Sharky to the squad. All right. So, very important now, okay? A lot of these things that I'm going to talk about right now, this is in my Fibonacci book, all right? And my Fibonacci playlist on YouTube. So you can always rewatch or reread if you need to get a better, like if you need to refresh yourself. But otherwise, strap in the seatbelts. Let's go. All right. So first, we have to deal with prior day Fibonacci, morning leg Fibonacci, afternoon leg Fibonacci, and opposing leg Fibonacci. Okay. So let's start off from the top with prior day Fibonacci. Prior day Fibonacci is very straightforward. Okay, so I put that over there for you guys. So here is the previous day's low and the previous day's high. So I'm going to go ahead and draw this with the fib like this. Okay. So there's the low, there's the high. Okay, this is a very powerful trading strategy because what it does, guys, it's anticipating where in this case SPY, we're anticipating where it can go before it bounces. You're already seeing where are the possible levels that it can go, right? So the 50% is exactly 50% of the range. All right. So there's always a chance that this middle line is going to be support or resistance because it's algorithm-based trading. Algorithms are mathematically programmed. Okay. So what I like to do is I like to let the first candle come in like this. Okay. Usually I'm on a lower time frame, like the 1 minute, for example. So I could see it clearly. Okay. So now we're on the 1 minute together. Okay. First candle comes in. It's hugging the 618, right? So now we say, okay, algorithm is here, hugging the 618. Let's take the opening range breakout of that 1 minute bar. Or if you miss that, we have an inside bar right there. So now your whole thesis is based on this 618 level holding. You could see it holding physically. Like if you look at this right now, you could see that it held, right? So you can take that, or if you want, before the market opens, you can look at the pre-market, see where we're at, and then put a limit order directly on the Fibonacci level itself. Very powerful thing I'm teaching you guys here, okay? This is trading like a robot. Now, what are the benefits of this? What are the main benefits of just using a fib level to come in, right? You can have a blind order right here on the 618. What is the benefit of doing that? Can you guys tell me? Right, so there was a 618. And what I'm going to do now is while you guys answer that, I'm going to flip this fib. So this is the long, the bull, and let me draw the bear. The bear is going to take the fib from the other way, from the high to the low like this. And I'm going to extend this up. And we're going to see a lot of interesting things here, okay? So for the bears, next candle comes in, look at this. Rejection on the 618 of the bears. So we're on the 618 of the bulls and the 618 of the bears. And check this out. The bears bring it down. You see that, guys? Very powerful. Now let's pull the fib back up again. This is just using the prior day's range. This is beautiful because you can set this up every night and have this ready. Now look at this again. We come back down and where do we stop? Again on the 618. So guys, All right, limit order right here. Buying the dip on options right here. Stop loss can be below the 786 or this 90%, 886 or the swing low. So what so what you're doing here, guys, is because you're front running because you're getting in early, you're letting the trade come to you while the market is coming down. The call premiums are going to be cheap. You're going to get a good deal. And then on top of that, you're going to have a ability to have a wider stop loss because you're actually buying on the exact level. Okay. So hit me with a 3, if that makes sense. So you can always cut the chart into pieces. And from there, look at the open right away on the minute, look at the fibs around you and develop a plan. Beautiful. So what I'm going to do now is let me play this out. You're going to see later in the day, we come back down here and we actually test these lower fibs, which become support. So here we go again. Okay. So boom, we start pushing down. Now check this out. Okay. So now we're coming back down. All right. So you can use this to your advantage, right? You can use this for your advantage. What you can do now is you can go ahead and you can say, all right, we're coming down. Okay, I can start a position here on the 786. I can add a little bit more down here on this 886. I could put my stop loss below the low of yesterday, right? That's and you just size, like this is such a beautiful lotto play. Think about this with me for a second, please. Think about this. You're buying when it's going down. So your calls are going to be cheap, guys. So it's not really about if the setup works. It's about this. How did you get a good deal? That's the question. Because if you get a good deal and it works, you're going to make a lot of money. So let me just stop right there. And let me make sure you guys understand that. If you're buying calls and you're using these Fibonacci as blind, these are blind support levels. It's coming to you. Okay? It's coming into you. And the premiums are going to be taking a hit because the premiums are going down as we're coming down. So now you're coming in and you're building a position, right? You know where your maximum stop loss is. So you have an edge because you're getting a good deal. That's very important for lottos. All right. So hit me with the 2 if you guys followed me there. Now let's let it play out. Okay. We come there, we tag it. See the algo right there? The algo's sitting and waiting because the algo is smarter than us. The algo thinks in numbers. The algo knows if I take a chance here with a tight stop loss here and this thing pops, gonna make a lot of money. That's how the computer programs are programmed, guys. They're programmed to trade high probability, high risk, high reward, good return on the trade. So here we go. Bam. Okay, a little bit hesitation. Then we have the move. Beautiful. So generally, guys, what you can do is have a market order on the levels if you want to do it for conditional. But if you're doing lotto and you're at the screen, you can watch it, right? And then when it comes into you, you can manually just add it there. Okay. So now that's the prior day's range. So it doesn't matter which way you draw the fib. It doesn't matter because this is just percentages, right? 50% is 50% of the range, right? So all you have to think about it is like this. All right, let me show you guys. All you have to think about is like this. It doesn't matter which way you draw it. Okay, what matters is this. I'm going to show you. We have the high and the low of the previous day. But just remember this. Where is my tool? So anything, so 50% line is right around here. So anything in this upper zone here is a good attempt for the shorts. Anything in this lower zone here is a good attempt for the bulls. That's it. That's how you have to think about it. right? It doesn't matter where you draw the fib. What matters is you cut it in half. The upper range is a good short attempt. Why? Because it's up against previous resistance and you can have a good stop loss. Same thing goes for the bulls. Okay. All right. So that's the prior day's range. Okay. Very, very good trading strategy that I've learned over the years. Something I've experimented with. I love the fact where you can get a good deal. That means a lot to me. So now I'm about to take this into overdrive and I'm about to just blow up your mind. Okay. I'm ready right now to blow up your mind and take this into overdrive because I'm going to show you something right now. I'm going to go ahead and show you the micro Fibonacci legs, the morning legs, the afternoon legs. I'm going to show you that in detail. So before we move on, right now, take a sip of your water, take a sip of your tea, your alcohol, your wine, whatever it is. Let's get in. Hit me with a 9 real quick, and let's make this happen. So what I'm going to do, I'm going to go ahead and I'm going to replay this again. Okay. Now we can take a whole different perspective on this. So these are the concepts that I call the morning and the afternoon Fibonacci leg. So what these legs accomplish here, guys, let me just show you guys right now before I forget. I just want to show you that it's all written down, okay? This shit doesn't come out of my ass. Morning leg, afternoon leg, opposing leg, okay? Very important. So, all right, so we are not going to be using the previous day's range. We're not. What we're going to do is we're going to use the price action to help dictate what we do next. So generally what you do, right, is you have to wait for a push. There has to be one push, and it has to be a push in a direction, either long or short, doesn't matter. This is what we call the impulse, right? This is what we call the impulse. Let me refresh my trading view 1 second. So just make sure that there's no lag. Sorry about that. I think it was lagging a bit. 1 second. All right, here we go. First bar, bam, bam. Okay, we have a push. We start pulling back. So once you have a high and a low and we start pulling back, you draw a fit. Very simple, high to low right here. Okay, so right here, we already had a 50% fill. Okay, so we could see Algo stepped in at 50%, wrote it up, made some money. Next. Okay, now we have a deeper retracement. We come, look at this, guys. We come right down to the 90, the 886 level, and we have a big pop. So this algo, guys, this algo is smart. This algo is taking it level by level. All right, we tag the 50, push it up, make some money. We come down to the 90. Look what this algo did. Took it from the 886 down here, the 90, took it all the way back up to the 50. That's a good risk reward. Look at this. So let's say the algorithm's in here, long on this, stop at the low of the day, takes it back up to the 50. Guys, that's almost 4 times the money right there. That's huge. That's huge, right? That's big money right there. Small risk, big reward. So let's keep going. So the completion of a Fibonacci leg would usually see a push into new highs, but that doesn't need to happen all the time because these pops are good enough for scalpers. So only if it's a big algo will you have a push into new highs. So as simultaneously, while we have this leg trading for the bulls, now the opposing leg will show up. Now the bears have their leg right here, high to low. So the bears are in here now. So let's go. Boom. All right. So what you do now is you take your anchor, you pull it down. Okay. So we made a new low. So now the new leg is this leg. We made a new low. So the leg is from high to low. So we let this play out. Next, look at this. Algo comes in on the 786. Bam. Just like that. Check this out. There. See? This candle looks extremely bullish, right? It looks extremely bullish. But what we don't see behind the scenes is this algo sitting on the 786, just sitting there. Now, how does this algo play? Short here, stop at the high of day. Very simple. Look at this reward, 5 times. Beautiful. Algos have limit orders. They don't need candlesticks. They don't need them. Okay. So we come here. Now check this out. Okay. So we push through. Now check this out. So this is a fully completed leg. Fully completed leg. What do I mean? We have a push down. We pull back to the 786. And we trade exactly to the 618, guys. Now this is the part where I have to turn off the stream. Because when you guys see this, like, how can this be so precise? Look at this, guys. The low is 4607 and the 618 is 4607. You know what? Let me make this bigger. This is the part where I have to turn off the stream because I can't be giving away all the secrets all the time. I can't do it. I can't, guys. See that? Let's focus on this for a second. Let's try to get this image stuck in our head. 0.618, guys, is 61.8% extension of this range. Why is 618 important? Why does that number mean something? Does anybody know? What is the 618? Why is the 618 an important number? What is it? Does anybody know? What is the 618? What does it mean? The 618 is basically a proportion. It's a ratio we like to call the golden ratio. It's mathematical. So we see the 0.618. We see it all the time in nature, right? See if I can find something. 0.618 golden ratio of nature. Now you guys' mind is going to be blown because you don't know these things, right? These are the guys. Look at this. See this? This is all 618, right? That's like a leaf on a plant. Let me get some better examples. Man, I can't find anything good. Oh, let's just do images. Check this out. Your girl's right here. Mona Lisa, 618. Is this Michelangelo or Da Vinci? One of these guys, 618. Check this out. 618 on these plants, these spirals, guys. Look at this. They say the perfect face is symmetrical and has 618 proportions. That's what they say. Right? Look at all this stuff, man. Look. Do your research, guys. This is some serious things. So let me ask you a question. If you have a robot, you have an algorithm, it costs you 100 billion. You gotta program that algorithm to be precise with the entries and the exits, and it's all going to be based on math. So this is why we see retracements, extensions, okay? Extensions at exact proportions because of the math behind it, and also because it's just a crazy world in general. Like, trading is an exact reflection of what we see outside of the world. It's human emotion, it's greed, it's fear, it's all that. And it's also math. Okay? So here we go. So Algo steps in at the 618, buys it up. Okay? There's the push, there's the push, there's the push. Beauty. Beauty. All right? So now we can say that this morning leg has been completed. It's been completed because we had the push, the pullback, and trade to the extension. So we can get rid of this leg now because it's completed, right? What we're going to do now is we're going to go ahead. I'm going to go ahead and take it from the next high in the sequence. This is what I call sequence Fibonacci. So now this high was the last pullback. That's going to be our new anchor point. Okay. So let's go ahead. You see, we're into the 618 right now. Okay. There we go. Bam, bam, bam. See, so look, we come up to the 618, we push back down, right? So you don't need to completely roll over and crash in order for you to make money. You don't need that, guys, right? Check this out. We push to the 618, you're taking it back down. That's good money. Now check this out. While that bear is still dealing with this leg, now a new bull. So the bull that bought here, check this out now. The bull that bought down here is also adding on this pullback to take it back up. See that? So now the bull that was here is now adding here, and it's on the 618 again. You guys see that? So now the last thing that we do is what we call the afternoon leg. So now we're going into about lunchtime. So what we're going to do is we're going to take the complete high and low of the full day. And this is probably easier for new traders because you let the first hour or 2 hours go by, then you take the complete high and the complete low. Now check this out. Here's the full morning, the morning traded. Here's the afternoon. We have this push. We pull back to the same thing, guys. 886.90 right there. Now check this out. Okay. Sorry, I went too fast. But anyways, so check this out. We came here. We push back down again. We push back down again, guys. And what is that level right there? We just saw it. It's the 618. Okay, for this bull. Now we could take this bigger leg for the bull, and we have another 618. There's so many opportunities. There's so many. I can't even tell you guys, man. It's insane. Okay, you just got to catch one of these, and you're good to go. So we had this one, and then the last one right here, guys. So this bull does not make a new high, right? We can see it. It tries to, it makes it by a few pennies and then it turns around. So anytime, guys, we're coming off a big push like that, anytime we're coming off like a false breakout. So let me clean up the chart so we can look at this properly. This is very important too. So what I'm going to do here is I'm going to have the high of the day, which is right here. So we can all see this, right? We broke the high by a few cents and then we pushed down. So this is a double top, false breakup, right? We have a high, the bulls try to push it up, they got rejected. All right. So anytime we have these type of patterns, guys, double top, double bottom, now this is going to be our pivot point. It's going to be our pivot because it's a strong level. So what we're going to do now is now we have this impulsive leg here like this. See that? We have this push now, this push down. It's like we start the sequence again because the algos all got stopped here. We start the sequence again. Now we take it from this high to low. Check this out. Watch again. Watch closely. 618. See that? You guys see this? Push. We just talked about the 618. Right there. Now we come all the way down. Look, when we tag the 618 right here, guys, there's a pop. Don't be mistaken. There's a pop. Just what we talked about. 618 completion. And then if I take this now and I move it from this high and bring it down to this low, check this out, guys. This one right on the 50. Look at it. Right on the 50. See that? Now this one trades to the 50. So you see the algos are, sometimes they're greedy. They want to front run. So now we go 50 to 50. Okay. And then we can take this one more time. Oh, I lost that. Take this one more time. Okay, there he is. And then now take this leg down here. And there we go. Just the final play of the day. Trade to the 786, down to the 10% extension, done. Very, very, like, man, guys, like somebody might look at this chart and might be like, man, this sucks. This is chop. Someone else might look at this chart and say, this is art. See the difference? Boom. Shout out to my brother Roman Empire with the 99-cent super sticker. I very much appreciate your time being here, brother. Thank you very much. All right, guys. So hit me with the 10 right now if your mind is blown. I did not expect that we're gonna go down this rabbit hole. Okay, I did not expect we were gonna do that, but this is what I want. I want to share it. I want to share. I can't take this to my grave. I can't. And all of this, guys, all of this that I learned, I'm gonna tell you something. It came from me losing money in the stock market. Very simple. When you lose, you have two choices. You give up or you learn. And that's what I decided to do. So to tie back in to what I was saying about the fibs and the lottos is now just remember, if you're taking a fib with the lotto, you're letting it come to you. Okay, so let me do one example of that. So let's say this is a lotto. So we have this leg where we're talking about the short. Okay, so we traded to the 786, we traded 618. Okay, so now let me teach you something. So you're playing lottos, you see this push coming down. Everybody's panicking, right? But you can come in here and you can say, all right, you know what? I'm gonna do a position like this. I'm gonna start adding on the 50 and the 618, even the 272. I'm gonna start adding on these three lines for my calls. My max stop loss is 1. So this is the full extension. This is my max loss, but I'm gonna be adding on these fibs on the way down. Okay, I'm adding to calls because why? I'm getting a good deal with the calls. I'm getting a good deal because it's going lower, but I know there's a chance that an algorithm might be sleeping here. And when that algorithm is sleeping there, guys, I can step in and try to ride that wave. All right. So hit me with the 2 if that makes sense. So that is a lot better of a strategy than chasing something and getting bad premiums. All right, hit me with the 2 if you guys are good there. All right, guys, there we go. There we go. So what I wanted to summarize there and just say really is that Fibonacci and options, especially lottos, they have a synergy because what happens is a Fibonacci is like blindly trading. You're blindly creating support and resistance based on percentages. So now when it's going red, you might be buying. When it's going green, you might be selling. But you know what your risk is ahead of time. You use the fibs to help plan that out. All right, guys. I don't spend a lot of time on the fibs like I should because it's a very complicated subject. And it takes me many years to master it. So I like to always just stick with the simple things like, okay, inside bar, we take the inside bar down. I always try to, stick with that because it's very simple for people to understand. But for the people that are very serious about it and all that, I really want to share this knowledge with you. If you learned anything at all, guys, consider grabbing my book because I go in a lot of detail there. And you get 1 month free in the room. So consider that. Okay. Very powerful stuff. Very, very intense. Generally, I don't touch anything unless it comes to the 50 at least. I don't like playing 382s pullbacks. I like deep pullbacks. That's just me. I like 50% pullbacks and more. with a max stop loss at the swing high or low. Okay. All right, guys. 45 minutes in. I didn't really mean for it to go this long, but we just kind of went this way. We drifted here. At some point, one day, this knowledge will be, it'll get to the people that need to hear it, whether it's now or next year or whenever it is. And I appreciate you for tuning in, because I know that you are trying to get better. And I'm just giving away my strategies, guys. I'm giving my secrets. I'm giving my knowledge, because I'm not taking it to the grave. You know, I'm not. So what I need you guys to do, just hit me with a like and subscribe as usual. If you want to support the channel in a small way, guys, you can go ahead right here and just sign up to be a part of the Trading Wars Army like this. All you got to do is click join, and you can join the Trading Wars Army if you want to support it that way. That's totally fine too. So let me just link that. Oh, we got a big donation up in here, guys. Let's read this together. Chase Dietz, 20 bucks. Thank you, brother. It's been 1 year since I began trading with you, and I can't thank you enough for sharing so much invaluable knowledge. My brain thanks you, my passion for trading thanks you, and my portfolio thanks you. Rich the Go. Well, I mean, I'm very flattered, bro. I'm very, very humbled to hear that, because that's why I'm doing this, man. I'm grateful. I really am. And that just made my night, and it made my weekend. And this is what keeps me going, knowing that I have people that I impact in a positive way, right? That keeps me going. Because there's a lot of trolls, there's a lot of bullshit, but there are people that you can change their life. And doing that, can't put a price on that. You just can't. All right. So this is what we're going to do. I'm going to end the broadcast here. You're going to comment, like, subscribe. And what you're going to comment is this. So here are the 4 Fibonaccis that I've created. There's probably different names or whatever for this. So prior day fib, morning leg fib, afternoon leg fib, or opposing leg fib. What I want you to do right here is I want you to comment right when I end this broadcast. Which one have you traded, if any? Which one? Which one have you traded? I want to know. Okay, which one have you traded? I really should probably do a YouTube series on each one of these Fibonacci separately. I probably should. But we'll see, depending on the response we get, depending on what you guys say, because we're already doing the SPY series. So I don't want to have so many things going on, then confuse you guys. All right. So that's it, man. Appreciate you guys. Thank you for the donations. Thank you for the Trading Wars Army members. Thank you for everything. Actually, before we go, I'm just going to do this because I promised I would do this. Any Trading Wars Army members that have chart requests, you can throw it at me right now. Okay? Chart requests or questions for Trading Wars Army members, throw them in. Anything? If not, we can head out, but I'm here for you guys. Apple. All right, for Melly. Let's do it. All right. So there was like a lot of noise about Apple today, but it looks pretty flat to me. I think like people were talking about sweepers and all this crazy stuff, but I didn't really see anything here. I thought Apple went up 100% today based on what I saw on FinTwit, but that's why you never trust FinTwit. Anyways, so here we go. So Apple, very tight range. All right. Specifically on the daily chart, I do not see any patterns. On the weekly chart, we don't have any patterns. On the monthly, we don't have anything. So in terms of like trading war styles, we don't really have anything to trade. But I would not be surprised if Apple moves tomorrow, just because it's been you know, in the news lately. It's been having some moves. So I would say if you want to give it a shot, you can go ahead and try the opening range breakout. Snow. Snow, let's go to the daily. So Snow, double inside bar. Thank you, Sharky, for that. Powerful, powerful pick into tomorrow, guys. Be ready to watch this one tomorrow. Snow looks exceptionally, it looks ready to do something. Okay, look at that. We have that tight range right there. Boom, ready to make a move. So keep an eye on that. Thank you, brother. Tomorrow's lottos. So right here, bro, all of these lottos are inside bars for Pfizer, Cisco, and DraftKings and Activision Blizzards are holy grails. So that's why I'm looking at them for tomorrow. Peloton. So Peloton didn't quite hit the target, but we still made some good money today. Looking at the daily, it's a pretty bearish close. So with Peloton, guys, you could see it's on some previous support and there's a gap down here. So if Peloton, if we do break today's low, we have a chance to really fill that gap at some point. So keep an eye on that. But otherwise than that, no trading war strategies ready. No inside bars or anything. Goldman Sachs. So we had an inside bar yesterday. We had a little, chop today. Nothing really special. I would kind of just be a little bit careful with this one. I don't see any patterns. And with the chop from yesterday, maybe it might chop again tomorrow. So just be careful. All right. So my cough is acting up. Been talking too much. So I'm going to end the broadcast here. Thank you very much. As I said before, please comment which Fibonacci have you traded? Prior day fib, morning leg fib, afternoon, or opposing? Comment right after I end this broadcast. I appreciate your time. I hope that I helped educate you some way, shape, or form. Please share the education to those that you can, and let's keep this ball rolling. I'll check in with you tomorrow. All right? Take care.